If you want to make a lot of money and grow your portfolio really quickly, there's no better way to do that than compounding, because the ETF I'm going to show you today will do just that. And not only are you going to compound one time per week, but twice a week. The first time I made a video about this ETF was before they announced their first distributions. And my projection was only 10 cents. Check this. They've been paying 19 cents. So if you round up, it's pretty much 20 cents. So look, the first time they paid was October 2nd, October 6th, October 9, October 13, which is the coming distributions. Now we have these numbers. I'm going to show you how much you need to invest to turn your portfolio into $1 million portfolio. Again, the numbers I'm going to show you here are projection based on these numbers we have and the price share of this ETF. There's no guarantee that you're going to make this money. So before we dive into this ETF and show you how much you need to invest, first let's look at today's update. Today's stock market was bleeding red. There was a blood on Wall Street. Check this. All the major ETFs that I usually talk about on this channel, they are really in deep trouble. So for example, here you can see QDTE 340. MSTY, one of the most popular ETFs, it's 435. Today, the price is only 12.98. Alti crashed almost 3%, 275. And today's price is 531. MSTR stock, this is underlying stock that MSTY has exposure to, did go down about 4.84. So if you look at the MSTY percentage it went down, is pretty much in sync with its underlying, which is pretty good because you don't want to see one has crashed more than the other. There are 4.35 and 4.84. This is a pretty almost even. Blocks, one of the best ETFs, went down about 5.39. This is an ETF that has exposure to crypto, and this is Ethereum and Bitcoin and other companies that have exposure to crypto. Went down massively, $1.48 or 5.39%. If you want to know more about blocks, I made exclusive video about this ETFs. I'll put a link below. And in my video, I said this is one of the best ETF to invest your money in 2026. And other ETF that went down is WePay, went down about $3.20 or 5.76, almost 6%. But again, WePay came out at $50. Now it's $52.76. So you're still up from where it started. And just quick reminder, WePay is an ETF from Roundhill that has exposure to all the weekly paired ETFs from Roundhill. And it does pay weekly dividends, so pretty good, and it's one of the best ETFs because it does not have NAV erosion. As you can see here, it's still at $52 even with this market crash. It came at 50, so you're still up in price return, but also you're up with all the distributions you have been collecting since this ETF started paying the first distributions. These are just few of the ETFs I want to show you today. There are more ETFs that went down. Pretty much the whole stock market just crashed today. Now let's move to the elephant in the room. This is a Defiance Nasdaq 100 Light Spread Income ETF, QLDY. Price today is $49.22. It went down same as any other ETFs in the market today. After hours, it seemed to be picking up back again to $50.11, about 1.80%. So hopefully market on Monday will open higher. It all depends. If you want to buy this ETF, it's better to see that the price is crashing because you're buying at the lower prices. But for people who own this ETF, maybe they want to see their ETF is performing well. But regardless, this ETF pays twice a week, and whatever you're buying, you're going to compound your money very quickly. 52-week range is between 49.22 to 51.84. This means today is the lowest it has been since it came out. Volume is 61,760, but average volume is about 25,000. Now let's look at the quick description about this ETF. This is an official Defiance website. Nasdaq 100 Lightning Spread Income ETF QLDY is an actively managed ETF that seeks frequent income while maintaining the opportunity for indirect exposure to the performance of the Nasdaq 100, subject to a limit on potential investment gains. QLDY is the first ETF designed to make distributions twice weekly aiming to deliver more frequent income than traditional income focused fund. So this is very critical. It does pay twice per week. As I've mentioned, compounding your money twice per week is way better than compounding your money once per week or even once per month, because this way your portfolio will compound faster. Here are two strategies that Defiance employs on this ETF. The first is synthetic equity exposure through deep in the money call options on the Nasdaq 100, providing participation in equity market performance. The second strategy they're using is daily option premium generation through the systematic sale of 0 days to expiration, 0 DTE put spreads, seeking to capture rapid time decades from short dated options. So these are the two strategies that Defiance is using to have exposure to the Nasdaq 100 and also to generate income that they are going to pay you twice per week. Investment objective of this ETF, as usual, is to seek an income. That's the main thing you're investing in this ETF. And the second investment objective is to seek capital appreciation. And as you've seen in their strategy here, this ETF has exposure to the Nasdaq and is Nasdaq as a growth fund. So hopefully, if this ETF performs as it has been, then you're going to have that capital appreciation as the Nasdaq, and of course, you're getting the income at meantime. Fund details: net asset as of now is closer to 9 million. It was incepted September 17th, 2025. Ticker symbol QLDY, trade on the Nasdaq. Management expense ratio: these are the fees you are paying for you to have this ETF. It's about 1%. But remember, you're getting about 40 something percent. So if you're paying 1%, it's not a big deal. And again, this fee, for people who don't know, it does not come from your portfolio or from the dividend that you're receiving. This fee is usually embedded into the price return of the ETF itself. So you don't really have to worry about this one. You just have to be aware of this is how much you're paying. Top holdings: they have a call option on the Nasdaq, call option on Nasdaq. They have treasuries. They have First American Government Obligation Fund, which is a bond. So of course they would have bond as a collateral to write those synthetic call options on the Nasdaq. And the smallest holding here is cash. This is relatively small, and I've shown you distributions here. So if you look at their website, they say weekly, but of course they pay twice per week. As you can see here, the first time they paid was October 2nd, and then they pay 6th, they pay 9th, they pay 13, and they're going to pay on the 16th, they're going to pay on the 20th. So far, they have been paying a very consistent about 19 cents. So if I round up, I would say maybe 20 cents. So this is very good. It's very good for people who want to have that stability and predictability. So you know exactly how much you're going to get. And it's very easy to do math, knowing exactly how much you're going to get. But are they going to pay the same every time? That's to be seen. And whenever they come up with changes, I'm going to let you know. So please make sure you subscribe to this channel and hit the bell button so you can always receive notification. And if you like this type of content, as always, please smash the like button and share with someone you think this video might help, to help my channel grow so we can spread more knowledge on income investing. Thank you. Now let me show you the final chapter, and this is going to be an income projection. So QLDY, the price of today is 49.22. Average distribution they have been paying is 0.197. Annual yield with the price of today is 41.58. So using our average distribution and our yield, we going to have income projection, and this is a weekly compounded growth with twice weekly payouts. And again, these provide the income stays the same, and of course share price stays the same. This is just projection, guys. There's no guarantee any of these numbers will be true, because they might change payment anytime. So you're going to start with $10,000 is your capital, and this is how many shares you're going to get: 197 shares. And that first week, you're going to get about $77. And you can see a progression of each week, you are going to get more income. And of course, your portfolio also grows. By week 40, you're going to have 13,000. Within 52 weeks, your portfolio will be 14,895. This is about a year since you first started investing. Remember, you haven't added any amount of money since you first put that $10,000. The only thing you did here is to just reinvest all your distributions. So within that 1 year, your $10,000 has received 4,895. Very impressive. And this is reinvesting all your distributions. And we assuming there's no growth of your fund and there's no growth of these distributions. And of course, there's no reduction. So meaning you're getting that 0.197 as a dividend. The first table was weekly projection. Now let's look at annual compounded growth with twice weekly payout. Here I did annually from $10,000 to $1 million portfolio, how long it's going to take you. So we can see here the first year, as we've seen, is 14,895. Second year, you are starting with that amount. Then end of second year, your portfolio is over 22,000. End of second year, your money has more than double because you only put $10,000. Now you have accumulated over 12,185. Now you keep putting that money in your portfolio, and then fifth year your portfolio will be about 73,000. Your portfolios keep growing bigger and bigger. 11th year your portfolio is at 800,000, so you're short of 200,000 to be a millionaire. At that point you have collected closer to 800,000. Now let your money grow and invest for one more year. Your portfolio will turn into 1,192,000. So you have collected over 1,200,000 at that point. So then if you want to compound and grow your money bigger, you just let it grow. If it keeps paying this way, that means you are going to compound this very quickly to be a $2 million portfolio. Remember, the bigger the number, the faster your compounding effect kicks in. It's just going to be like a snowball really quick. And before you know it, it's 2 million, 3 million. So guys, I just made this video to give you a quick update on QLDY. We have seen the price has crashed a little bit down today. And because of that, we may take advantage and invest in this ETF. And the second thing we learned about this ETF is that it's paying twice per week, and they are paying almost 20 cents per share. That's very important. And you can invest in this ETF within just 12 years. If it keeps paying the same, your portfolio literally from $10,000 can be up to $1 million portfolio within just 12 years. Not that long. But again, I want to be clear. These numbers are just projection. There's no guarantee that this is going to be a result for your portfolio if you invest in this ETF. So if you want to invest in this ETF, make sure you do your own research and make decision based on the information that you find. That's all I have for today. If you like this content again, please smash the like button. And thank you very much for watching. I'll catch you on next video. Bye bye.